Welcome back, everybody, to We Are TPM with myself, Kyle Teixeira, sitting next to John Teixeira once again. We are here to discuss building wealth with real estate with We Are TPM. And this week, specifically, we are going to talk about March Madness investing in spirit of the March Madness tournament that is starting. So if you would like to know our brackets that we haven't made and probably won't make, I'm just kidding.
I made 2 of them.
Oh, you did?
Mm-hmm.
I'm about to make 3 then, 4. You could double it
It's
up.
too late.
No?
It already started yesterday. You can't make a bracket now.
Technically, you can make a late bracket with it's not necessarily lottery odds. It's a little different now, so I'm just kidding.
I have no idea.
Give us a call, 817-818-9039. You could find out what John's bracket is because I was a little too late apparently. Or send me an email at showmethemoney@wearetpm.com.
I missed it. That's the first time ever I missed it, isn't it? Man.
It's not the first time I've missed making a March Madness bracket. You know?
I got 120 points yesterday, so I'm off to a rocking start. But so investing. So kind of the idea here was, making a bracket is an imperfect thing, right? So you try to do the best you can. But you make decisions when you're making your bracket a lot differently than you're going to make your investment decisions, whether they're your real estate investments or stocks or Bitcoin or whatever it is, right? You want to make those investments more soundly than you would putting your bracket together, right? So
100%.
Okay, good.
I mean, that was a good way to phrase that because I'm like, yeah, you definitely want to do that.
I pulled up an interesting stat.
Okay.
I asked Google, has there ever been a perfect bracket? I already knew the answer, but I wanted to see what it would say. According to CBS Sports, the odds of filling out a perfect bracket are 1 in 9.22 quintillion.
Told you they were worse than the lottery.
To put that into perspective, the closest anyone has ever gotten to a perfect bracket was in 2019 when an Ohio man correctly predicted 49 out of 63 games. That means he failed 14 times. And that's the closest anybody's come. That's amazing, isn't it?
Mm-hmm. I mean, quintillion. That's really when we brought this topic up, I was like, I agree with it conceptually. Statistically, I think researching the bracket is probably the equivalent of throwing darts at a wall, and I think you have pretty much the same amount of chance if you throw darts at a wall and see and your bracket might even be better,
Well, that gets us into our first bullet point. So that was a great segue into it, and that is being intentional. So
being intentional.
So talk about being intentional regarding building wealth with real estate. Did I just put you on the spot?
Yeah, I didn't expect you to say that. I was thinking about something else. I was thinking about another intentional. No. Well, yeah, you got to be intentional. So, like, you should not willy-nilly invest in real estate. I'll use a comparison of the stock market, right? So, say you have money to invest. Should you invest it? You have a lot of money to invest. Should you invest in real estate? Should you invest in the stock market? I'm not going to answer that question. But the two differences are, there's different risk factors, but there's different liquidity factors too. So You have to be intentional with real estate because you can't just decide that you were maybe wrong and pull the money back out. You can't make these quick moves. Like I could buy some Apple, something happens 5 minutes later, or Apple stock, something happens 5 minutes later, and I'm going to sell that, and then gone. The money's back, and you can make those quick decisions in the stock market and in that investing type. In real estate, you have to be intentional in all parts of the process. You have to analyze the property, you have to start with a plan, and you have to execute that plan. Because even, I could compare that directly to the stock market too, is without a plan, you will fail in investing. Because you don't know if you don't have a plan in investing, then you don't even know what your target is. You don't know what you're trying to do. You don't know what your goal is, and execution of investing without a goal is gambling.
So you just described principles to do anything in life more successfully.
Yeah.
Right? Like, so are you intentional about your marriage? Are you intentional about your parenting? Are you intentional about your business? Are you intentional about your health goals? Are you intentional about your financial goals? We're talking specifically about real estate, but gosh, those principles that you just laid out, sorry about that, we should be using for every aspect of our lives.
Well, and because we're humans, right? We're not computers. We're not, we're fundamentally tied to our emotions. You can't just disconnect your emotions completely. So if you know you're human, then you want to plan to manage the things that you can control. You want to plan to manage your emotions in your marriage and investing and all these things.
Do you know you're human?
Right.
I like that.
Well, that's why like the best stock traders in the world are barely
don't
human,
know they're human?
Well, it's because the point is that you have emotions tied to this, right? So what's the way to minimize emotions? Have a plan, commit to that plan. Then you won't be stressed out about the different points of the process. You'll have, because confidence and knowledge can help alleviate stress at certain points of a process.
And intentionality helps create that confidence.
Yeah.
Right? Like when you're intentional about something, whether it works a little bit or a lot, you intended to do it, it worked, and that creates confidence for your next move or the next plan that you make. Maybe you adjust it a little bit and go, okay, that didn't work as well as I hoped, so I'm going to do this, but that is still being intentional.
Mm-hmm.
Right? And so to your point, that you just made a great point, and that is that confidence is everything and in anything you do in life, and being intentional helps create that confidence.
Well, and I actually used this example the other day because like the casino, like gambling, right? That is not investing. So I want to start before I make this comment that that is not investing, but it does tie into the same doing things with intention and controlling your emotions, and it gives you the highest odds of success if you do that. One of the best roulette runs I ever had with my friend was we were having a terrible day at the casino, and I'm like, you know what? We are going to take all emotion and decision out of this, right? We are going to use a computer. We're going to remove the emotion. We asked Siri,
don't do this, y'all.
Flip a coin, red or black, right? The coin was red or black. And it made it stress-free. I mean, there was a lot of up and down during that process, right? But we didn't care because we committed to a plan and we executed it, right? We were like, all right, this either works or it doesn't work, but we are removing the emotion. We are taking the odds at what they are. We have a 48% chance of winning this or whatever it is. We're going to not lower those odds by saying, oh, 5 blacks hit. Now a red has to hit, right? A red has to hit. The 5 blacks hit. Like statistically, no. Statistically, the chances haven't changed, especially if you have a computer rolling the ball and not a dealer, right? Who's a human. So the point is have intention and execute on that. So translating that into real estate investing it always starts with the plan. We talk about plans, the different strategies investors take in long-term rental investing, but they all start with the strategy. You can't just end up with a portfolio of Section 8 houses or end up with a portfolio of high market rent houses that are new, and these different strategies. You have to intentionally go get them.
Mm-hmm. Yep.
In order to make it succeed.
Yep. You are correct.
I'll let you jump in with what you wanted to say.
No, it's all right. I like the casino. I actually like the casino analogy. I mean, because we are not promoting gambling. Some people definitely should not be gambling because it is something that people have a problem with.
I feel like everybody shouldn't gamble, but
gambling in and of itself is a horrible idea, right? But like in a casino, to your point, you and I both, and most of the people that I gamble with are very intentional in how we gamble, from the perspective that we are walking into this casino to play a game and entertain ourselves and have a certain amount of fun, and we're planning to spend this amount of money to do it. It's no different than me going to a restaurant and saying, hey, I'm going to put $200 down on a meal and I'm going to go have some drinks. I'm going to spend $400 or $500 tonight on entertaining and enjoying myself. That's how I walk into a casino, with that perspective. So I'm planning to spend that money, and I have a plan on how I'm going to spend it. And sometimes I walk out a winner. Sometimes I walk out a loser. That's not the point, and that doesn't matter.
But it does bring up the point that that's the intentionality, and that's how you look at it. Because, you're intending to spend this amount of money on an experience. Well, and that's just like anything else. That's how I treat it too. It's also why everyone we've always gone to the casino with seems to think that we're very good at gambling and win a bunch of money. And it's like, no, we just have a higher likelihood of winning money because we're treating it completely different than you. You know, this money, when we walked into this casino, I considered this spent. So,
Yep.
you know, and yeah, we're jumping back to a casino because it's the easiest way to take the negative side of this. But like, let's take it into flipping. The quick and easy way to lose money in real estate is people who think that they can just go flip something and they're like, oh, well, this is an easy deal. They're offering me this for $100,000. This is.
And I could sell it for $200.
I could sell it for $200.
I could repair it for $40. So that gives me $60,000, right? Sounds good, doesn't it?
Yeah, it sounds great because you're treating it like a stock. Even in stocks, that's not true. You still pay a broker fee, even if it's like a cent, you know? The point is there's other things to consider that people do not consider. They don't consider maybe this house doesn't have an AC unit. Maybe this house doesn't have drains. Maybe this house is a burnout and completely, you know.
Maybe by the time you take 7 months to build it out and rehab it, you didn't take into account all of your holding costs and how much it'll actually be worth when you're done, because now it's only worth $180,000.
You didn't consider that $100,000 investor hard money loan at 15% is $15,000 after the first year that you didn't add in there.
Hey, this is a good segue to our second bullet point. Can we get to our second bullet point? Otherwise, we're going to be here forever talking about intention. Research, right? Like research is a good way to protect yourself from making a bad investment.
I agree. We're relating March Madness to investing, I'm realizing, but
there you go.
Statistics you
finally caught on to the topic here.
The statistics you started this with pretty much prove that March Madness is the definition of gambling, and it's the definition of madness level gambling.
But this Ohio man that got 49 out of 63, do you think he did any research to do that? I guarantee you he knows a lot about college basketball, and he's an expert in college basketball in order to be the one person to get the most perfect.
I want to see
bracket.
How many AI brackets win this like, what is it, 2025's year or March Madness?
It would be interesting if an AI could get more than 49. Would be interesting, but there is so much stuff that goes into a basketball game that is unforeseen, right? But if you do your research and you know how this team plays versus this team, are they defensive? Are they more offensive? Do they have players hurt? Right? What have they done the last 3 to 5 games? Right? Like that's research that if you really want to win, you really have to do to put together as good of a bracket as you possibly can. I personally don't know crap about NCAA basketball.
I don't either, but I've heard a lot of people explain it the way you just did. And I remember my lessons I remember in school, we learned about March Madness time. They would be like, they'd always bring it up. They're like, you want to do a lesson on the steps of exponential growth? And it's like, you can research that first level of the bracket, maybe the second, but by the third, you're at like millions of possibilities of who could be matched up in that third.
Well, yeah, you can't. Yes, that's right. You're exactly right. That's what makes bracketology so impossible.
Yeah.
Right?
Because then
I can't believe there's even a word like that.
The next level based on seeding too. So It's not like it's a direct bracket. Like it's just going. You also starting with 64 seeds. I mean, it's an insane equation. I don't know. I always said that I think I bet that Ohio man used the dartboard method. I mean,
I think there was probably some research involved.
All right. So what do people got to do to research? Where do this, like, I'm listening to you, John and Kyle. What do I research to start with investing? I'll skip that by rephrasing the question. What do I research to start making my plan?
Oh, okay. That's 2 different questions. So really, both are very good questions. So in order to create your plan, a good research would be to read books, listen to podcasts like ours or other podcasts of people that do things in real estate. Ask questions, get a mentor, right? Please don't go pay, what's his name? What's that real estate dude that's making a ton of money off of everybody selling his seminars? Anyways.
His 10X guy?
Yeah, the 10X guy. Don't pay that guy. He's got
Well, this is a different type of real estate investing. That's what people never remember is, why can't we remember his name right now?
I don't know why
you see his face, his aggressive sales
Grant
pitch.
Cardone.
Grant
Thank you very much,
yes.
Steve.
Nothing against Grant Cardone, but he does syndications. He does real estate syndications.
He does a lot of things, and there's a lot there's a lot of controversy and stuff about him. But anyways, the point is, if it were me, I wouldn't listen to him. He says some good things, but he says a lot of stupid stuff too. And he's all about making money off of you. So don't go do that stuff. But find a mentor, find somebody. There are some conferences that you and I have been to that are really enlightening, that, the SFR conference and there's some, you could go do stuff to do some research to figure out what level of investing or what kind of investing really matches your personality and to create a good intentional plan.
Yeah, and stay off. Do not TikTok and YouTube shorts and anything that's
take them with
like
a grain of salt.
No, they're not research. They're not research, and
take it with a grain of salt.
If you ever remember that the goal of the people that you're listening to is, what's their goal? Is it to educate you, or is it for views? Right? Like, what's our goal? Is it to educate you, or is it for views? Right? The point is, like, you need to have some backing into what they say, because a lot of it is concepts. So a lot of them is attacking on, no matter where you're getting information, is they're talking about a concept. So one thing that I've seen over the years, and even the generations before me, that inspired them to get into building real estate portfolios, the most common thing I hear is Rich Dad Poor Dad. I've always heard that. I heard that from you. I know so much about the book, never actually read it, right? But I know what he's talking about. But then I also see a lot of controversy about what he says and how, like, well, that game plan won't work in 2025 and the way he did it won't work and blah, blah, blah. So that roadmap's useless, whatever. Rich Dad, Poor Dad isn't about a roadmap on how to build a real estate portfolio.
It's a mindset.
It's a concept. It's a concept between what by the time, what makes you a rich dad, what makes you a poor dad. It's a concept I've tried to teach, that you've taught me since I was a teenager, to my friends, that it's this, you don't succeed and build wealth in this world without assets. That is a baseline starting point of every investing concept. Is nobody ever got rich without assets. Nobody. I can't think of one example, unless you inherit it. Which, what are you inheriting? You're inheriting assets. That's the starting concept. And then if you focus nothing on attaining assets or acquiring assets or stacking assets or any of those things, and if by the end, if you have a 20-year-old kid and you're now the poor dad because you have no assets, you could have made $1 million a year. If you spent $1 million a year, you're still broke. You're still worth nothing. So that's the point. It's concepts. Research the concepts and then formulate a plan from that.
To wrap up your point, if you're going to do research, Rich Dad Poor Dad is a great place to start. Robert Kiyosaki's original works are, in my opinion, spot on, point on, and a great place for somebody to start to build the mindset that you need to create those intentional plans that we talked about.
Well, and there's a lot of good mentors that have completely conflicting roadmaps, like Dave Ramsey and Kawasaki, or however you say his name. I mean to brutalize it.
No, they don't.
But they don't
conflict as much as
their
people
roadmap
realize.
Seems to conflict on the surface, right?
Yes.
Like Dave Ramsey doesn't agree with debt
but
all these
he's
things.
okay with real estate debt. He's okay with appreciating asset, to leveraging an appreciating asset, as long as you've done some other things in your life and you're not in complete debt everywhere else.
Well,
That's
you don't
the
have
point.
to follow everybody's roadmap exactly, but just have one, right? Like, I don't completely agree with, or no, I don't really disagree with anything Dave Ramsey says. There is part of my personal roadmap is some of the things he says take more intention and time than I would like to put into it.
And some people don't want to be as conservative as he is.
And some of these plans work better if you have a lot of capital versus if you have a little amount of capital and you want to stack your way up to capital. Right. Like there's so many factors that go into it. Like Dave Ramsey's approach, if you're sitting on $2 million in cash, you got 40 years of your life left and don't know what to do and don't want to work, just go follow his roadmap. Like he's got a great roadmap for that person. Not everybody's just like waking up every day with $2 million in cash, wondering what they should do with the rest of their lives, right? It's usually the opposite. So
be a buffalo.
Huh?
Be a buffalo.
Yeah. I mean, it really comes down to like, if you intentionally use, say, 20% of your income for 20 years versus the person that doesn't, the results will be insanely different if they're executed properly, right? And this is the same person working the same job, making the same paycheck. And they'll both teach you that. So, not that I'm suggesting either of them.
Well, this also feeds really well into our next point, which is consulting with experts. So what experts are we talking about? Some of the people that you just mentioned are experts that you could consult with, research, read their books, listen to, what have you. But who do you got that you could really turn to, that you can consult with and ask questions? The obvious answer to that is what, Kyle?
ChatGPT.
ChatGPT?
Google.
That's an expert
Google.
now. Oh
Gemini.
my God. Google. Oh my goodness. Not where I was going. I was thinking more like real estate agents and property managers.
I know.
And
you set me
CPAs.
up perfectly to say like maybe us, maybe people who do
Google.
What we do,
Oh my goodness.
You started this podcast with Googling something for statistics, and technically Gemini told you that, not Google, but find an expert, a local expert that you can go meet with, maybe talk to them in person, because you'd be amazed at people who do things or follow a roadmap successfully. If you can get some of their time, how willing they are to share it. So that's the thing about this industry. The real estate industry is like at the level we're talking about, it's not like insanely competitive. Like, I guess that's a hard way to put it. The investors aren't competing necessarily with other investors' plans and roadmaps.
I think most people understand that there's a saying that we used to say, there's enough business out there for everyone, so we don't need to act like competitors, right? We can help each other up, help each other along. If you've got a great roadmap, share it. That doesn't mean it's for everybody, but share it, because there's more business out there no matter what you're doing.
And research
than you can
niches,
do.
Man. There's so much success I've seen meeting people over the years, conferences, and just random people that have like had these successful real estate journeys over some niche piece of the market that I didn't even know about. I have never heard about. I've met multiple people that I've had some, program or something, and they're like, well, this program pays this much extra, the cash flow is insane, and they just built a business off of that. Some of those things don't exist anymore, regardless, but look into it. When new programs come out, they're called opportunities, right? It's when things change in a market, it's all opportunities. I met someone the other day that has a portfolio and a property management business around this portfolio over I'm not going to bring up exactly what it is, but it's a niche part of the market that only gave out licenses in the 90s. So they don't even give out licenses to do this type of real estate investing anymore. So it's not only a niche part, it's
dwindling. It's going away.
Yeah, you're restricted into it. So now there's value there. Now she has a license into a business, or she has an opportunity for someone else. So like it could be sold or something like that. So look for that, research that. But saturation, watch out for saturation in every single market. It's always my biggest advice. And you don't know what saturation is? I don't know. Look it up. I'm just kidding. It's more supply than demand. That's it. More supply than demand.
Very good. I love it. How about taking action that gives you predictable results?
What makes them predictable?
Well, the research that you do, right? If other people are doing it, like for instance, the most predictable thing you can do is buying a single family residence in a suburb like ours and renting it out. That's extremely predictable. If it's a normal 322 with a garage in a subdivision that's got 1,000 homes, there's nothing more predictable than that, because you can see that 100 people have done it in the past year, and this is how much rent they got, right? Like, you should know exactly what you can do with that. What's unpredictable? I just got off the phone with a client that was starting to tell me about wanting to buy an old historic theater for $2.2 million. I mean, like, there's probably nothing more unpredictable. Like, I don't know, unless somebody's already tried to open it and failed, then maybe there's some predictability. But like, I don't know. I'm trying to think of, like, you can buy a church or something and turn it into the Sistine Chapel. That's unpredictable.
I mean, that's like commercial real estate. Some people say, let's start in commercial. Well, there's a lot of things people don't know about commercial, and even like what you just said is partially commercial real estate. Execution is a huge part of it. Like, there's factors where, like what you just said, like in the subdivision, the rents are all pretty standard. Whether it's you, property manager, or somebody else renting it out, they're going to get in a pretty predictable range of rent, right? If you run a movie theater after buying it, how that movie theater is ran is heavily dependent on the success and the revenue of that and the rent and all those things. So yeah, that's not as predictable.
It could go well, but it could drain you of your entire life savings also, right? Kind of like a restaurant, right? Restaurants can be the best thing you ever did and can be the worst thing you ever did, right? Mm-hmm. It's not predictable, and it has a lot to do with a whole bunch of factors in between. So,
how many people have you met that have told you that opening X restaurant was the best thing they ever did? I asked you because you're famous for saying that.
Nobody I can think of.
Yeah. I've met people who open bars that have said it's the best thing they ever did.
I can think of one person. I can't think of one person, but he ended up selling it. So
yeah, which probably was the second best thing he ever did.
Because eventually, even good restaurant investments go sour. All right, let's shorten this up a little bit. Let's end this off with don't go solo.
So would you let someone else pick your bracket? Well, that's what you just asked.
Would I let somebody else pick your bracket?
Pick your bracket, your March Madness bracket.
If I have money on it, heck no. Although maybe I would let somebody else help me pick my bracket.
Yes.
That's the point.
But sight unseen, blind execution, all of these things would probably not occur. You got 10 grand on this bracket.
I might let like Rich Eisen do it, right? Or somebody of that ilk, that is literally an expert in that. Maybe, I don't know, but I don't know. You know what I mean?
Yeah.
Would you let Kiyosaki pick a house out for you to buy?
No.
No?
Definitely not.
Okay.
He doesn't know my situation.
Okay. Good point.
Would I let him advise and help and talk to him about it? Yeah. Yeah. Blindly? No. Nobody.
How about this? Don't go solo because you suck like everyone else that does a bracket. Right?
I like that, but I also want to caveat it with there's also the complete opposite advice in real estate is don't partner with people
that don't have anything to add.
Yeah, that don't have any value to add to the deal.
If they're not bringing money or expertise or anything to the deal, then they shouldn't be in the deal. That's a good point, because I've seen a lot of people do that, and you sit there and they tell you the story about their partners, and you're just shaking your head thinking, why are they your partners? Like, you put up all the money, you're the one that knows what you're doing. Why is this person even in this deal?
You're doing the tax, you're doing everything. I haven't ever talked to them. So you're talking to me?
But don't go solo. So if you don't know what you're doing, then definitely partner with people. Or even if you do know what you're doing, like how many times have we done a deal completely solo with nobody else involved? Probably never. There's either going to be a lender involved. There's going to be a contractor involved. I'm not going out there, right? I'm not going out there and doing this all by myself. And that's how your investments should be. That's how you should consider your investments. Get a property manager if you're renting, right? Get a good real estate agent if you're buying, unless you're buying wholesale properties. Put people on your team that are experts, but and don't do it yourself.
And sometimes people fail in that, is they think that resources aren't valuable in real estate either. They think that, like, oh, I don't need my real estate or involve them in this deal or get connections from them, and then now the deal closes and I need all these contractors, right? And now I'm spending 20 to 40% more on every contractor because I didn't have good resources to make sure I got good ones at wholesale prices, or they're 40% more and 40% worse at the same time, you know? So those things do happen. It's all valuable because at the end of the day, that's part of your bottom line too. How much a renovation costs you can make or break a deal. So, many of times we have seen that.
Absolutely.
So. And people underestimate, and don't Google, or like when you talk about research your costs of everything right now. Your insurance costs, your tax costs, your renovation costs, because people Google that or use average estimates or everything. You're going to be right now, and in this environment for the last year or so, you're probably going to be wrong. You know, people underestimate everything. Insurance has gone up 3x in the last 2 years. Taxes have gone up retroactively, not that much, but in our area, in some cases, that much. But renovation costs are all over the place.
And if you want to be reminded what your costs are, we have a podcast that we did called Your Flippin' Costs, wasn't it?
Definitely.
I think it was what it's called.
That
Your
one's very insightful. So,
that
we talked about how paint, when at the time we did that podcast, painting costed like 5 times more than it had costed 2 years before that. I remember that. It just is what it is. It's part of the market. You got to consider it. So research everything, have a plan, execute it, and you will have way better than a
Keep
1
going.
in
Consult
4
with your
quintillion chance.
Take predictable action. Don't go solo because you suck.
Don't go solo because you suck. Don't spend 10 grand on a 1 in 4 quintillion chance, because if you do hit that, they're gonna owe you like what, 40 quintillion dollars.
I don't even know what that number was. It was 9.22 quintillion.
The richest man in the world is the guy who, that would ruin my whole point, right? The richest guy in the world is because he won a March Madness bracket. He didn't have any assets. Damn it.
All right. Well, I think we killed March Madness, don't you?
Did.
I think we crushed it.
Madness.
Now I'm going to go see how bad my bracket does today.
All right, well, let's do that. Well, if you guys have any questions, want to give us a call, talk about the odds of March Madness, we'd much rather talk about the odds of how you can be successfully building wealth in real estate. Give us a call, 817-818-9039. If you are in Texas, in the Mansfield area, we have the Mansfield Pickle Parade that we will be at in downtown Mansfield. And by the time you hear this, that will have already occurred.
It'll be in the past.
But, hope to see.
We can go next year.
It was good to see all y'all out there that that came.
Glad you brought that up.
In the future. So, shoot us an email. showmethemoney@wearetpm.com. Come see us in downtown Mansfield, and me and John are
we gone.